Hello there. Welcome to Market Call. Keith Richards is our guest today. He's President and Chief Portfolio Manager at ValueTrend Wealth Management. And Keith is taking your questions on technical analysis. You can call us toll free at 1-855-326-6266 or send an email to marketcall@bnnbloomberg.ca. Great to see you, Keith.
Good to be here, Andy.
So last week we saw choppiness in the markets. Maybe you'll put up a 1-month chart for the S&P 500. What did that tell you?
Well, I mean, it was kind of needed. Things are still pretty overbought, but at least we got some reprieve from the uber parabolic move. My comments were that we had to stay above the 50-day moving average. If you look at the trend since the April lows of this year, that is, it's the 50-day has been supporting the market. So I needed to see that hold. It most certainly has. So as far as I'm concerned, the trend is still good. And we continue to leg into stocks that we like and, kind of for now, danger over. We still have some of the things that we don't like. There's poor breadth, and we have divergence of some of the bigger momentum indicators like MACD. I don't know. Do you know what MACD is?
Remind us.
Okay, it's moving average, convergence, divergence. There's different price momentum indicators that I look at. Some are short term and some are kind of longer, big picture. Mm-hmm. So the short term ones are fine, but it's things like MACD that are showing us that the market's still kind of not seeing the price momentum. And you can see that even on the stock chart. The price momentum is weakening. So long and short of it, I'm going to stay with the trend. I'm okay. I don't mind the market right now, but I'm always in the back of my mind, just, keeping a bit of caution.
Let's put up, say, a 5-year for the TSX. The TSX composite hit a record high today, as you know. So did the good old Dow Jones Industrial Average. Is there anything distinctive about the TSX chart right now?
Yeah, in fact, it's the same thing. It's the TSX resources, and you guys know on the show and through if anybody reads my blogs and stuff, I've been talking about resources for 2 years now. And resources are picking up, and that TSX is heavy in resources. Number two is if you look at even at the Dow, it's not got the heavy tech weight. It's got Microsoft, but it doesn't have the heavy AI weighting that, say, the S&P 500 has, right? So these two indexes you'll see are generally outperforming the market. I mean, the S&P 500, I should say. So yeah, we're seeing, if you look at the tech stocks like Meta and stuff, some of them are breaking down or at least weakening, whereas all this other stuff has catch up to play, and they seem to be doing that.
Let's put up maybe a 1-year or a 5-year for Meta. Oh, thanks, control room. And there's the Dow.
Yeah.
Do you pay much attention? Sorry, I'm jumping around on topics here, but do you pay much attention to the Dow Jones Industrial Average?
Well, only as an offset, and Craig and I were just talking about this morning. Actually, I was driving here and we were having a long conversation. And so we kind of moved into equal weight S&P. We've been buying nothing but, commodities and value stocks for the past year. And we believed all along that this AI thing would start to roll over. Now we're seeing it. So do I pay attention to the Dow? Yes, I do, only because it's an offset against, say, the tech-weighted NASDAQ and even the tech-weighted S&P. When you see the Dow and TSX, to your point, move, that means that there's some rotation going on. And we're seeing that rotation, and we feel good, pat myself here, because we did kind of move away from that stuff over the past year.
We got to take a break. Keith Richards is taking your questions on technical analysis. We're coming right back. I'm looking forward to hearing the answer to this one. We're going to talk about GoEasy, the high-risk lender. That stock has been sliding. What is the technical picture? We'll be right back. We have an email from John. Could I get Keith's technical analysis of GoEasy, GSY, high-risk lender? What's a good entry point? Is it a good long-term holding?
Okay. Well, I'll maybe answer the long-term question in a second because I'll want a longer chart. But if we look at even the 3-year chart, you can see that, I'll pull this chart up. You can see that support, which was, let's call it $160-ish, was broken. So you have to then start spotting, well, what are the next levels of support? So there's an old rule in technical analysis that old resistance, which, going back to 23, might have been around 120, is going to act as one level of support. The next level will be at the prior lows, which is way below 120, probably around $90. So you want to see 120 hold. And to answer the reader's question, is it a buy? Well, I would like to see it bounce off of 120 firmly, not just 1 or 2 days. But if it did, I'd maybe be interested. If it cracks 120, you're probably looking at 80 or $90. So.
Right. And of course, this is part of a bigger trend. If we look, say, at Propel Holdings, it's another non-conventional lender, PRL. That one has been under
Let's
pressure.
call them subprime.
Well.
Guys.
Okay,
And that's the old word from the
For sure.
2008. But no, I mean, if you look at the group, and actually I just did a video on that. There's 2 groups in general that have been slaughtered. And one is these guys, the subprime group, and also the restaurant business. They've all been slaughtered this year. So you want to maybe be careful with those groups right now.
It's funny. I just watched a clip on Instagram from Margin Call, that movie with Jeremy Irons. It's a fiction about the early days of the credit meltdown.
Yeah.
So good, I got to rewatch it.
Oh yeah, The Big Short too, and
Big
there's
Short,
so many great, lots of stories.
Okay, so sorry, longer term GSY then anything. I'm not sure if could we maybe quickly
5 or more year
5-year chart because of course it has had rapid growth. Would you be? Yeah. So
you can see the same thing, right?
Yeah.
It's like there's your support. It was broken. I didn't draw a great line there, but you get the picture. It broke. So here's the next level and here's the next level. It's the same story I just mentioned. There's no, like when we look at long-term growth, it shows up on a chart as an uptrend. In other words, higher highs, higher lows, and it just keeps going, okay? Yeah. This is not happening on GoEasy.
Okay. Jazz in Milton, Ontario. Go ahead, please.
Hi, Keith. I just had a question about Uber. It's been trading sideways since about May, and just wondering if it's currently basing and waiting for a catalyst for the up or downside. Just your thoughts on this. Thank you.
Thanks.
Yeah, well, we like Uber. We own it in our aggressive. So we have 2 strategies. We have what we call our regular platform, our conservative platform, then we have an aggressive one. So in the aggressive platform, we bought Uber, and we like breakouts. If you guys watch me on this show, at any time, you'll always hear me talk about breakouts. I love them. So we did get the breakout. We've been in Uber since. It can consolidate. It might, the last peak will add some support to the stock. That's going to be around $90 to $95. And then it's 93 right now. So, somewhere in that zone, it should find support, and, we'll sell if it breaks. But, I am of the opinion that the stock will move on and go higher.
Oh, okay. Elliot in Hamilton, Ontario. Fire ahead, please.
Good afternoon. Slicing through the 20, 50, and 200 on its way down, do you see on the 1, 3, 5-year charts any price level that you could identify that might represent a final support for Descartes Systems? And secondly, tax loss selling and all, do you see it as anywhere near oversold? Thank you.
Thank you.
Yeah, and actually that's another video I just did was on tax loss selling, because there's so many. Like if it was kind of all about a select group of stocks, as I was talking about at the beginning of the show. The breadth has been horrible this year, and you get a lot of stocks sold off. So this is just one of them. So there was a neckline break. So Elliot was asking, well, what's the next level of support? It looks to me, again, these charts can't get exact numbers, but it might be around 110. Let's look at a 5-year just for kicks and giggles, and we can maybe see if there's some other levels we should be looking at. You go back in time, the older support levels are, the less important they are, because those buyers and sellers kind of left the room a while ago, but 5 years isn't too bad. So yeah, somewhere in that, again, that might be $100 or something, but 100, 110. That's probably where you're going to find support. If it doesn't, then you've got lots of stuff down here. But let's assume that if it's a decent company, it'll find support around somewhere near 100.
But you don't love the look of that chart then now for a
Well, not right now. No, here's technical analysis 101 is downtrend, right? So downtrend is signified by lower highs and lower lows, and that's what we are getting. So until that stops, it's funny because sometimes my job is too simple, right? It's just, can I identify up, down, or sideways? That's all I need to do all day, right? So this is going down, therefore you don't buy it during the downtrend. You wait for it to base. If it goes like this for a bit and breaks out, then you buy it. But that hasn't done that yet.
Okay. We have Michelle in Vancouver on the line. Go ahead, Michelle.
Hi, Andrew.
Hi.
Can I get Keith's technical analysis of Novo Nordisk? Where do you see the stock going long term? And if you do hold it, would you continue to hold? Thank you.
Thanks.
Okay, so this is another one of these tax law sellers, isn't it? Yeah, the pharma industry and whatnot. They're pharma, aren't they?
Oh, they're with weight loss and diabetes. The Danish crowd.
Sort of like that.
Yeah.
Okay.
Yeah.
Okay, so downtrend. So again, we're talking about trends, right? So lower highs, lower lows until that stops happening and starts. Now, could this be the beginning of a base right now? Very, very well could be. But there's the high and there's the, I'm going to just clear the screen. So there's your last high, there's your previous high, there's your most recent low, so you really need so there is a slight indication that recently it made maybe a new low that was slightly higher. What I'd want to see is more of this and then a breakout and then I'd be all over it. But that's a ways off.
Okay, so not calling to you. We're going to be back with Keith Richards of ValueTrend Wealth Management, taking your questions on technical analysis. There's the number, 1-855-326-6266. Let's head to Kingston, Ontario. Kevin's on the line. Go ahead, Kevin, please.
Hi, thank you for taking my call.
Pleasure.
Keith, thank you for the blog that you write regularly. I visit it, and I really enjoy the Value Trend blog. Very good insights.
Thank you.
My question is on Canadian natural resources. I know oil's been hovering in these high 50s, but there's got to be a point where you say, I got to buy this stock. Its yield is pretty high. I'm just wondering, where would you buy CNQ if you felt it was time to buy it? Thank you.
Thank you.
All right. So, Kevin, you're a reader of my blog, so you know that I've been kind of out of oily stocks, really like late 24, and shifted into gassy stocks. So just keep in mind, I think right now nat gas looks a bit better. But I think CNQ though is kind of a blend, if I'm not mistaken. Like they're involved in both. It was in a downtrend since 24, and since then, like remember our rules: lower highs and lower lows, and higher highs and higher lows. So we've definitely taken out that last peak and that last low. We're breaking through a little bit of old resistance. So that's a good sign for CNQ. I wouldn't mind looking at a 5-year chart. So if that can be pulled up, then we could look at kind of the bigger picture. But at least in the near term, it doesn't look too bad. So can we pull up a 5-year?
Yep,
there we go.
There we go.
All right. Okay. So this, it looks like most of the producer stocks, and that is that kind of did a little breakout, then broke down, found support at the old breakout point, and now it's trying to bounce off of that. It's not an exciting area to be in right now, oil or even nat gas for that example. But nat gas at least is showing some sign of a bid lately, so I think the producers will chase that. I think that CNQ, it's a really good company, so you could see it bounce back to the old highs. I'm going to give it a 5 or 6 out of 10.
Okay, so you're sure not raving about that one.
Yeah.
Tom in Milton, Ontario. Go ahead, please.
Yes, hi, how are you doing? Thank you for taking my call. I'm just phoning with regards to OpenTech, and they seem to have some problems with their CFO and their new CEO and their CFO. Just wonder what your thoughts are. Should I hold or maybe bail out? I'll take.
Okay, there's been management turmoil at OpenText.
Yeah, so you always have to, whenever you're looking at technical analysis and whenever you're kind of thinking in terms of should I buy or hold, Craig and I have an uncle point. So when the bully is pinning your arm behind you, And you finally say uncle because you can't take it anymore. So my uncle points are usually right, like I wouldn't want to see the stock break the old support level. See, it's already fallen a chunk. So, are you going to hold on for another couple bucks? Maybe if you like the stock. It probably will find some support. Again, I always have to guess when I look at these charts, but that might be around $45 or $46. I'd be inclined to think that it will fall to that level at least. So personally, as a buyer, I wouldn't step in. You as a seller have to decide if you're willing to wait for it to go down to 45 and then prove if it can hold or not.
Oh, okay. I want to hear your answer on this one. Paul is calling from Orangeville, Ontario, thinking about a nuclear stock here. Go ahead, Paul, please.
Yes, the question is about energy fuel. Can you take a look at the 1-month chart and see what's been going on and what's your advice on the high when to get out and the low when to get back in? Because has been doing the yo-yo syndrome. Mm-hmm. And in the last 10 days, actually, all the uranium stocks have been down.
Yeah. So, okay, energy fuels, great long base. There's an expression that we use, the longer the base, the better the case. Mm-hmm. And it's actually, sometimes the old adages actually are meaningful. And this is one, because typically when a stock has been trapped in a zone, when it breaks out, it usually means something big is happening because it's been trapped for so long. There's so many people that want to get out. So it broke out, and look how hard it broke out. So now it's you could argue that over the latter half of 25, it went pretty parabolic. I mean, that's the angle of it. So it's taking a rest. So let's look at maybe a 1-year chart, because that's what Paul was asking for, and maybe we can just take a quick look. Yeah. So there's your big move. After what you would call it, like almost like a cardiac arrest, and then it broke out, and then it kind of formed a bit of a top, and head and shoulders type of top, not a head and shoulders, but a neckline top, and it broke that. So to me, really, I'm going to want to see, like, you can see a small zip here, but that's early. I would want to see this, as I always like to mention, you usually, after some sort of a decline, you get a base. It's early yet to say if there's a base. So at this point, would I buy it? Absolutely not. But if it based, I would probably buy on the breakout.
Oh, okay. If it established a low or lower limit.
And it says we're not going any lower, and we're going to start trading in this range, and then you look to buy it on the breakout.
Okay. We're going to take a quick break. We'll have a look at Keith's past picks when we return. Keith was on our show August 27th. His first idea was ARC Resources, the energy producer. This one under pressure over the period. Yeah.
I was just saying, it's all about timing being on the show, right? Because this thing moves like a yo-yo. And I mean, it's a great trader. And so when, I like buying it near the bottom. Look at the base. Like, this is absolutely, you want to talk about support, you want to talk about predictable support, there it is. This is the classic, swing trader stock. So, I mean, I still like it. We still own it. It's been trapped in this zone. The reason we like it is because ultimately, if you look at nat gas itself, like the commodity, it's had its bump. Like, it's starting to move. We were buying it because all the factors were there for nat gas to move. Now it's moving. So this is going to follow because it's a producer. Meanwhile, you have to be patient and grit your teeth because it just keeps going up and down and making me mad. But, but I like the stock. Craig likes it fundamentally a lot. In fact, he loves the stock. So we're going to continue owning it.
Your next idea was a silver ETF, SIL, in New York, and this one working out nicely. Silver has been soaring this year, even more than gold. Yeah. We actually, beginning of this year on BNN, I said buy silver over gold because it had been underperforming. It is playing catch up, not the stuff you put on your French fries, but so it's, we see lots of upside. And the producers, by the way,
are, if you look at the recent pullback on gold and silver, the producers got spanked way worse than gold and silver itself.
In
right?
the latest weakness.
That's right, about a month ago or so, right? So we think there's tons of upside on the producers in particular, both gold and silver.
Yeah, spot silver is up about 84% this year, whereas gold is up 60%.
Yeah. So, I mean, and then the producers will reflect something similar. So.
This afternoon on commodities, which starts at 3 p.m. Eastern Time, we're going to talk to Aya Gold and Silver.
Oh, nice.
They say we're the only pure play silver producer on the TSX. They're active in Morocco.
Oh, well, cool. Okay.
Okay, and then your final idea was cash. There's an ETF called cash. It's essentially a money market fund.
It's just they bought a whole bunch of high interest savings accounts, and we were holding cash over the summer because we always hold some cash every summer just based on seasonality. But there was some risk on the markets. It didn't play out so much, but I mean, look, we're systematic, and if it says there's a higher risk than normal, we hold more cash. So we did. And but on the positive, the stocks we held, like the golds and the metals and whatnot, did quite well. So we ended up keeping up with the market over the summer with lower risk. And now we're out of that cash, and we've been buying. And we're still holding some cash because we sold the ETF. And we've been legging in very regularly over the past couple of weeks. Right.
And is that a thing you do often, build up? You do build up a cash position?
Yeah, quite often. Yeah. I mean, we use this thing, readers of my blog will know what this is. It's called the barometer, like a barometer. And it's made up of a number of different factors, 11 factors to be exact. And it just measures things like trend, breadth, volatility, market sentiment, stuff like that, market momentum. And it puts it all together, gives it a score. And if the score is too low, we hold more cash. If the score is high, we go in more deeply. The higher the score, the more beta we add too. So we could be fully invested, but if it's somewhere in the middle, we'll have maybe an average beta. But if it's on the right-hand side of the scale, like i.e. a high reading for optimal opportunity, we jump in with all kinds of beta stocks, high beta stocks. So we use it for different reasons, but this summer the market was saying there was more danger than normal. Didn't play out to be negative, but that's, it's worked more often than not. That's all you can ask in a trading system.
Okay. We're going to be back with Keith Richards of ValueTrend Wealth Management, taking your questions on technical analysis. We have Paul on the line from Edmonton. Go ahead, Paul, please. I'm not hearing Paul. Tourmaline is the question.
Okay, so we own it, and this is like ARCs, except at least it's bouncing off the support. But you'll notice something, and that is that the gas stocks. This is another gassy producer. Okay, it's trapped in another one of these swing zones. So we think that you can look at buying it here and selling it there while it's doing this swing trade, but we do think eventually that'll break out because nat gas is going up, and that's all you need. It just needs to be sustainable, that move on nat gas. It's pretty early yet, but we're bullish.
Okay, we've got Cliff on the line from Toronto. Go ahead, Cliff.
Good afternoon, gents. Cliff, my question is about MDA Space. Former high-tech favorite has really taken it on the chin over the last couple of months and is currently trading almost 13% down for the year. However, analysts, 6 of the 8 who cover it, still give it a strong hold. I just wanted to get your reading of the tape and if you think this might be a candidate for a tax loss sell, or if you think the faithful should hold on for a news-driven bump. Thank you.
Cliff, I'm happy to talk about this one because this is wild. Like I said, we have 2 portfolios. We have a conservative and aggressive. And we have watch lists. So, these are stocks that we don't own right now, but we're always watching them. And Craig has approved them fundamentally for whatever reasons. And remembering our aggressive strategy, the approval by Craig is more loose, meaning that because we know it's aggressive and we may trade it, in and out. MDA Space is on our aggressive list. Okay, so thankfully we didn't buy it. It just, we just kept. It's still on the list though. And to your point, Cliff, it's a Craig likes it for what it is. It's got its volatility. It's got its, But so what I would say is, and where we will probably become serious about it, is if it manages to find support right where it is right now. So remember my rule of thumb, which is it has to base. It has to stop going down. Up is good, down is bad, unless you're shorting. Simple rules, I'm telling you. So if that does form support, I would expect you'll see some sort of upside because eventually, hopefully, the fundamentals shine through. But I would not buy this at this point. I wouldn't even probably sell it until it proves to break this line. If it breaks whatever this is, let's call it, it's really hard to see, but $20, then I'd be saying that would be probably something you want to get out of. And could you use it as a tax loss selling? Cliff was asking. Sure, you could sell it because it may not move for the next, where you got 30 days to buy it back, right? So you have to do this in December, but it may not move over that period of time. Hard to say, but that's my 2 cents.
Okay. Joseph in Montreal wants to ask about a big water treatment stock. Go ahead, Joseph.
Yeah, good day. Thanks for taking my question. Keith, I'm a longtime acolyte of ValueTrend.ca, so I know you like non-correlated assets and commodities. I'm wondering what you think of water, good old H2O for industrial chemical use or even downstream basic person rehydration use. And the way I'm playing it is with Xylem, XYL in New York. The correlation to S&P has been pretty tight for a few years now, but it's come off in the last 6 months or quarter, which tells me it might not be as correlated to S&P, which could be good. It's done pretty well for itself, but it doesn't look like it's too overbought. RSI is still under the magic 70 number on both daily and weekly measures. It looks better weekly than it does daily. I want to get your opinion on water, if this is something you would consider as a non-correlated asset or a commodity to play, and how does Xylem look to you right now? Thanks.
Okay, well, in this mug that I have in my hand right now, there is water. So there, I'm adding to the stock's profits. Anyways, I haven't looked at this stock. It's broken out, and yes, it's another, you could say, commodity related stock. I don't know if water is really a commodity. It doesn't really trade on the exchanges, but it has broken out. Purification, that kind of thing, I assume is what they do. So it's done what it needs to be doing. And I would say that, sure, what happens in an uptrend, as we know, it moves up, it pulls back, and maybe it's time for a pullback, maybe it's not. As you mentioned, the RSI and whatnot are not too overbought or in the overbought sector. So I would say that if you own it, I would continue to own it. And if you do see it pull back, then I would be probably adding to the position because breakouts be breakouts, and I like breakouts. So it's got everything that I would want to see.
Okay. We've got Larry in Courtney, BC. Larry, go ahead, please.
Hello. I had a suggestion here from a friend of mine to buy this stock, TMC, the Metals Company. And I'm just wondering what you think of it and whether I should get in on that.
Right. And they want to harvest minerals from the seabed, the ocean bed.
Right. TMC, got it, the Metals Company, TMC. So, marginally higher high. If this, this is obviously a pause after a parabolic move. And I talk about this over and over again, but no parabolic move is sustainable forever. So eventually they slow down. But what I do like is that's your base. And again, remember the saying, the longer the base, the better the case. So now you have the makings of a consolidation, possibly, you could say, well, that's a higher high, but let's call it a consolidation. And if it continues to find support at the old low, which let's pretend is $5, then that's a good thing. And I would say there's nothing wrong with this stock. And in fact, I would be adding to it the moment it starts to prove and maybe bounce off a little bit of that 5-ish support zone. So it looks good.
And we have an email from Mike. I'd like to ask Keith this question. If possible, the stock is Hammond Power. What do you think of HPS.A?
All right, let's look at. Generally speaking, power companies are something I'm interested in.
And they make electrical equipment, power.
Yeah. So that stuff can be very good with the whole AI thing and everything, right?
Yeah.
So, I mean, funny enough, there's a lot of backdoor ways of playing AI. AI itself is kind of overdone, right? We see all these tech stocks roll over, but, nat gas is one of them, right? You gotta, so where's the power going to come from? It's going to come from certain commodities. We talked about uranium today, one of the viewers, and then there's the power companies themselves. So this is a great breakout from a base. Again, that angle of ascent tells us that it was a bit overbought, and now it's pulling back. It could theoretically pull back to that neckline breakout, which, again, hard for me to tell where that is, but maybe 130, 140, 150, something like that. I would say that so long as that holds, it's safe. If you own some right now, I would probably continue owning it, even though it's potentially got some downside in it. But most certainly, if you're not in the stock right now, I would be looking anywhere close to that. Again, these charts aren't great for picking exact prices, but let's say 130, 140. That would probably be a great place to buy if it finds support there and bounces off.
Right. So you wouldn't necessarily be a buyer right now then?
Well, because you're possibly going to retreat to that 140 or whatever.
Yeah.
So I don't think I want to, but I would keep an eye on it. It would actually go on my watch list. This is like I was talking about my watch list. So this would be one that I would be watching for sure.
Okay. We're going to be back with Keith Richards of ValueTrend Wealth Management. Technical analysis is the topic. Jen is in Caledon, Ontario. Beautiful area of the province. Go ahead, Jen, please.
Hi there. Thanks for taking my call.
Pleasure.
I have got Cameco on my watch list and would be really interested to get your analysis opinion on when to buy in.
Thanks.
Okay. Well, I was mentioning I've been in gold and silver for past couple of years. I've been in Cameco for the past couple of years as well. We saw a pretty nice breakout, probably about a year and a half ago. We were buying it. We used to actually trade it when it was kind of doing this, and then it broke out, and we stayed in the trade. Right now, it is doing what you want. I mean, the breakout is awesome. You breakouts be breakouts, and you've got higher highs and higher lows. So if I clear my screen, there's an uptrend. So this is a great stock. We like it. We've owned it for a while, and I think that the pullbacks, so long as they hold, I always look for a bounce off of a trend line. I don't buy just because it touches the trend line. But if it proves it in the next week or two or whatever, I would think it's a good entry point. Another thing I should actually mention to the viewers is that we're professional stock traders, what I do for a living. So it's a good tool for retail investors to understand is always leg in. So if you're going into a new position, don't just put your whole allotment. Let's say you wanted 5 or 6% of your portfolio in Cameco. You don't put the 6% in today. You buy an allotment and see if you're right or wrong. So, and then you stay with the trade, and then you buy a second allotment, and then you buy a third allotment. So I talk about that in my books and courses and stuff. So, probably $15 online at Amazon, and I learn what I'm talking about. But that's something that people should do is go in stages.
I just learned something this week. The bomb they dropped on Hiroshima had about 64 kilograms of uranium.
Yeah.
But to destroy the city, only 1 gram was converted to energy.
Oh, is that right?
And that was enough to kill hundreds of thousands of people.
And that's how we power cities.
But 1 gram was all that was actually changed into energy under E equals MC squared. George in Toronto, go ahead, please.
Good afternoon, gentlemen. My question is to Keith is on Methanex, and I'd like his opinion analysis on that particular stock going into the winter months, and particularly if you hold a position in it, would you advise on adding to it or not? Thank you very much for taking my call.
Well, George, you're in luck because we do hold a position in it. So I do have an opinion on it. Okay, so, it washed out. And then we saw, I mean, this is a longer term chart, but we saw a little breakout and we bought it. We still own it. It's peeling back just a little bit lately, but we use targets. Okay, so the first target was more or less met, and that's the old support level on Methanex, on the corporation. If that can break, and this is where Craig comes in. He's our CFA, resident CFA, fundamental analysis, and he feels that there's enough argument behind Methanex to think it will break through. What we have only done is one leg. I was just talking about the principle of legging in. So we've only got a 2% position. If it breaks out, see, people always want to buy at the bottom, but we actually like buying on the way up. So if this breaks the, let's call it 55 or whatever it is, $56 area, then we will be adding a second leg. So we do like the stock fundamentally, and technically it's worked so far. So next step is, can it break the old support level?
We have a caller from south of the border, Richard in Clayton, New York. Richard, great to hear from you. What's your question, please? Oh, after all that, I don't know if we do still have Richard on the line. Oh, sorry. Visa is the question.
Okay, as they say, crickets. I heard crickets. Yeah, Visa's, after a nice run in 24, it's basing. A lot of so what's going on, if you look at these, we were just talking about at the beginning of the show, one of the subprime lenders, right? So if you look at, there's this kind of a consumer that's in trouble in North America. Some of them are defaulting. I was the big student loan company. They're seeing more defaults on student loans, like there's the small consumer, et cetera. So Visa's going to be getting people defaulting on their payments or whatnot. So that's probably going to be putting some pressure as you go into a softer economy. So it's traded, but the good news is it's got support, and it does seem to be holding that quite nicely. So I think if you own it, right now it hasn't broken down, so there's no problem with it. It may not do anything for a while. In fact, in soft economy it probably won't. But there's a bit of a range, and maybe you can swing trade it. I give it a 5 out of 10. There's nothing wrong with the chart. It's just nothing exciting.
Oh, okay, not calling to you. Jacob in Thornhill, Ontario. Fire ahead, Jacob.
Hello, good afternoon, gentlemen. I'd like to ask about Shopify. If it's still going up or down, the holidays are coming. I have a lot of it. That's what it came in to explain me exactly what to do with it. Thank you very much, and have a nice day.
Thanks.
All right. Well, kind of a nice long-term trend. It recently made a significant higher high. It wasn't all that parabolic, by the way, to reach that. So it's not super overbought. But like everything, things pull back, right, within a trend. That's just what happens. So we're in one of those pullback periods. Your guess is as good as mine as far as how far it goes. I honestly, would it retrace all the way back down to the trend line? That's a pretty far drop. And if the company's not, doing anything significantly wrong or producing bad earnings or terrible guidance or anything, I doubt you're going to see, anywhere near 150 or anything like that the trend line might suggest. I think you're going to get maybe a little bit more downside, but I would, if it starts to, maybe pulls back a bit more and then finds a little base, I'd say that would be a buying opportunity because I know it's a good company and I know it's on an uptrend.
We have an email from Marge. May I please have Keith's assessment of Firan?
Yeah, what do these guys do? I've never even heard of them.
There's some kind of engineering, but let me confirm that to you. Firan Technology, maybe, they are, aerospace and defense electronics.
Okay, so going back to the charts though, because that's where I'm comfortable. We have a base after a pretty strong, and I go by the angles of ascent or descent to tell if something's been parabolic or capitulation on the downside. And you're seeing that this went a little parabolic, as a lot of stocks we've talked about today, and now it's taking a break. And remember, those breaks are healthy. You need that. If you look at a long-term chart of Google, by the way, you want to talk about how many consolidations. Take a look at like a 20-year chart of Google, and you'll see it goes up and then sideways and then up and sideways. It just keeps doing it. It's like a ladder. It's like looking at a set of steps. So it's an okay thing for a stock to have this big move and consolidate. The thing you don't want to see is something like boom, and then it rounds over and breaks. That's where I'm not interested. So this is fine as far as I'm concerned.
Okay.
So yeah, we got a Google chart, but that's not very long. We need probably 10 or 20 years or whatever.
Actually, well, that's a good 10 years.
Oh, is it?
Anyway.
Okay, sorry, I didn't see that. Okay.
You can see post-2021, look at that. The techs ran up and then they crashed for quite a while.
Yeah. And actually, if you saw a logarithmic, these charts aren't logarithmic, so
yes.
You would see more of a like that. It's not perfect, but the Google does look like that on a logarithmic chart.
We got to take a break. Keith is sharing his top picks. That's next. Join us tomorrow on Market Calls. Stan Wong is our guest. He's a portfolio manager at Scotia Wealth Management, and he's taking your questions on North American large caps and ETFs. Let's get to Keith Richards' first idea. It's the BMO MSCI India Selection Equity ETF, ZID in Toronto.
Okay. So, when you look at the name of my company, it's ValueTrend. So there's Craig, that is the fundamental value stuff, and then there's me, all the trend stuff. Right?
You're the trendy one.
I'm always look at the bow ties and stuff. This is an example of where Craig and I had a meeting actually about this stock just a couple of days ago, because we're always legging in, like I mentioned earlier. And I like this ETF a lot, technically, because this is a triangle breakout. So when you get descending peaks and troughs, but rising troughs, that's called a symmetrical triangle. And when they break out, they can be very powerful. There's also some fundamental good reasons behind it. Maybe even that Trump will kind of work a better deal for them on the tariffs. But also there's some risk to it, and this is what Craig was lecturing me on the other day. The fundamental is that they can have some corruption within their government. Right?
Oh yeah.
So just a tad, right? So between it all, we decided only to take a smaller leg, because we've done 2 legs. So we're only going to do 1% rather than 2 on the third leg. But we really do like we like the look of this ETF, and the currency might have some upside too.
Okay, ZID. Aecon is your second idea, and this is yet another stock that's been powered by the nuclear part of its business.
Yeah, and it's been great. So since we bought it, it's had a nice jump. We like buying these little base breakouts, and that's what happened. It went parabolic. It's pulling back, to be expected. So what we're thinking right now is that this was an expected pullback. You can see on the chart. It did take out the old high. Maybe it's just on the verge of finding support there, but I think it will hold based on the fundamentals. It's a little thin for institutions like us to be buying. It doesn't trade an awful lot, but we like the stock as is from that whole power and engineering and infrastructure kind of thing.
On the nuclear front there, the death toll at Hiroshima was about 150,000 ultimately.
Okay.
Something to remember, I guess, at Remembrance Week.
Yeah.
It took 1 gram of uranium. Incredible.
Unbelievable.
Invesco S&P 500 equal weight ETF. So this is the broad American index, but equal weighted. Interesting. So you're keeping the Mag 7 under control there.
Yeah, that's it. Exactly. Because we were talking at the beginning of the show, you look at the Dow, you look at the TSX, and then you look at the S&P and the NASDAQ, which are all about AI, right? So what we decided is, look, the market's okay, the trend is up, but the RSP, which is the equal weight that I'm talking about here, looks like kind of sideways. It's in fact just bouncing off of a bottom in its trading range. So you can see that here. And we think it'll break out as this rotation. Not so much that we think that the Mag 7s are going to crash and burn or anything. That's not the point. It's more, they're going to probably they're already starting to show that they're going to take a back seat for a while anyways, because they got kind of overextended. So this is what we think is that you want to own non-tech names to take advantage of that. So this is one way that you can participate. Just own a little bit of everything rather than an overweight tech index.
Isn't there a risk, though, that you'll miss the go-go stocks?
Well, the go-go stocks right now, which are overweight, are so overvalued, we don't want to own them.
Right.
So we this is a way that we're going to get a little bit of them with the RSP, the equal weight, but we don't want, 20% of our portfolio of that being in those stocks.
Right.
That's the way we look at it.
And are you in the camp that I think a lot of managers would say you got to own some U.S. stocks?
We love U.S. stocks. No, in fact, we love the currency. If you look at the trend on the loonie, it's heading down. So we want to own U.S. currency. We want to own foreign currencies. We've got a lot of international exposure. We've got a lot of U.S. exposure. We have Canadian exposure too, but we have, and that's actually one of the reasons why we bought RSP, because we want more and more U.S. exposure. So
RSP, the equal weight S&P
equal weight,
500.
yeah. So it's not to be confused with RSPs like you say.
No.
So
maybe you could look at a 5-year chart for the Canadian dollar. You are concerned that our currency is going to still be under pressure.
Yeah. There's no doubt about it. Okay,
we'll bring that up in a sec. And there's a thanks control room. Yeah, look at that. Yeah.
To simplify things, there's a downtrend. I mean, you just it's inarguable, and in fact, I mean. Look, we're all good at some things, but I'm pretty good at calling the currency. I follow currencies. So, it broke out on, when the tariff announcements came out and the US dollar fell and all that stuff. But on a worldwide basis, if you look at I think there's only one other currency, I think it's Australia, that's doing worse on a worldwide basis than Canadian loonie. So our view is that, it's not necessarily that we're favoring the U.S. dollar, although we think almost everything will outperform it. But we want to own currencies outside of Canada. And that's why even the India ETF, we think there's a trade there. Like we think, we got a lot of emerging markets. So, that's why we like the U.S. trade.
Got to leave it there. Thanks very much, Keith.
Great.
Keith Richards, we're out of time on Market Call.